we had our meeting earlier today. Zoom did stick to their 40-minute limit.
Okay.
So they give us a 10-minute warning.
Hey,
So
Marty.
what I'd like to do with your permission is start off with the forbearance versus adding the months to the back end of the mortgage and possibly which banks or
Sure.
institutions are participating in that. And
Yep.
then we'll move on to the changes in, the mortgage purchases. And then
Sure.
if time allows, we can get into, appraisals and refinances and all that other stuff.
Okay.
Sounds
good.
like a plan?
Yep. Good format. Yep.
Okay. All right. So I have 3 o'clock. So let's get started before Zoom, drops us again. So we're fortunate, to have Ron Casaletto of Gateway Bank here to talk to us about what's going on in the mortgage world so that we can get the truth to share that with everybody else and help them through this crisis. So Ron, if you'll start with forbearance versus,
Deferment.
mortgage relief they're claiming they're going to help. Okay.
Right. Okay. Very good. Good afternoon, everybody. First off, there's been a lot of information out there that's going on about the differences between deferment and forbearance. Okay. And I did a little bit of research yesterday, and I have a list here of approximately 20 servicers that are not really, some of them are not really too clear. Some are explaining basically just call us and we'll basically deal with your hardship. All right. Some actually will say that it's a deferment for up to 120 days. Some are saying up to 90 days, and some are using the terminology of forbearance. Now, let me explain a little bit about the differences between the two. And what I've been doing when I've been talking to a few of the clients that called me about what's going on, I just referred them to their lender and asked them certain questions so they understand exactly what they're getting into. First of all, this deferment or forbearance is for anybody that is actually directly affected by the coronavirus, laid off from work, their business is shut down temporarily. They would be entitled to this forbearance or deferment. Now, getting into the forbearance basically, what that means that the borrower the payments will be held and be actually added on to the, that's the deferment. The forbearance is the monies that will be owed at some time at the end of the forbearance period ending. If it's 3 months, 4 months, they can ask for the entire amount being due at that time. To me, that doesn't help anybody, because if your mortgage payment is $2,000 a month and now you owe in the 4th month $8,000, who has that money? You haven't been working. So I don't think that's a temporary thing. I don't think that's really good for a client to get into. Deferment, and I'll read exactly what that means. Deferment allows the borrower to skip the mortgage payments for a set period of time. This may be there may be more options regarding this unpaid interest during this period of time. It may be added to the loan principal at the end, and sometimes the interest may be waived, but it all depends on your particular lender. So what I'm basically saying is, look, you better check with your lender, because everybody on this list here is saying different things. So there's no set rule saying that, okay, Allied Bank or City Mortgage or Chase Mortgage or Wells Fargo, they're doing the same thing, because they're not. The time frame is different, and their verbiage is different, using deferment and forbearance. Some, like I said before, are just saying on here, call us, we're offering some type of an assistance. So at this point in time, that's all I would really advise anybody that you run into, just explain to them to get the details. Make sure they ask the questions about, when is this money, if I defer this payment, or you're going to put me into a forbearance, when is this money due? How am I going to pay you back?
So Ron,
Because if
is
it's
there,
going
is
to,
there a website where we could get a list of who's forbearing and who's deferring, or just, or do you
I
just,
went on
or do
there
you think,
to, yeah, I went on to homeownership.org. Um, and like I said, it gives you the list of about 20 different servicers, but it's still very unclear, Jim. Very unclear. There's nothing that's really definitive out there that says, yeah, look, this is exactly what we're doing.
so the
Um,
best advice then besides homeownership.org would be to call your lender and ask, are they deferring or forbearing?
Correct.
Okay.
Absolutely.
And explain exactly what that means to me so I understand my options.
Absolutely.
Okay. All right. So
Explain
does
exactly what I'm getting to.
everybody understand that? Okay. Each institution has different rules and regulations. Okay. All
Yep.
right. If
Like I said, they're all different. Like for example, TD Bank, it says offering payment deferral programs for mortgages and home equity loans. But it basically just says call this number. All right. So I would think they're probably putting it on the back end of the mortgage based on how I'm interpreting this. But you got to
now,
find out. You got to call up and find out.
now, do you see anything changing in the next 30, 60, 90 days with that? Any indication that they may go from a forbearance to a deferment?
Nothing that's indicated here. I don't see anything that actually states that. Um, I did read on another site that did say they may even extend this even longer if this issue with this virus continues. I know from what we have done at Gateway, we for qualified buyers that fall into this situation, we could go up to 12 months already. We announced 12 months. So
As a deferment though, not forbearance.
right,
Okay. So, which is
yep,
important because if it's a forbearance, you got to come with a year's payment after 12 months, you know.
yeah, right. That
We'll
doesn't
get a
make too
lot
much
of
sense.
listings. We'll get a lot of listings in month number 11,
Yeah.
you know.
Yeah, right.
All right.
Yeah, so
So,
that's what we're doing. Um, eligible customers are allowed a temporary suspension or reduction of their monthly mortgage payment up to 12 months. So
Walter wrote down that he's heard six months, Walter? 1 year, 6 months. Okay. So every institution's different. So the
that's right.
best advice we can give as far as people with paying their mortgages, contact your lender directly and ask which one they're participating in, if any.
Correct. Very good, Jim. That's exactly what I would definitely recommend.
And we'll put that link to homeownership.org on Workplace.
Yep.
All right.
That would be great.
All right. So Ron, briefly today, I also explained, that these changes are affecting, purchase mortgages.
Yes.
So you want to bring everybody up to date on what you brought Mark and Gail and I, up to date on yesterday?
Yes, absolutely. There's been some changes out there. I've, of course, been in the business for 23 years. I have a lot of feelers out there. So I've made some phone calls to other former coworkers that I used to work with to find out exactly what their companies are doing. Most of them went to either a 660 or a 680 minimum credit score across the board on all their products. So it doesn't matter if the product is an FHA, VA, or a conventional loan. They increase their scores from to a 660 or a 680, depending on the company. What Gateway has done is on all investment properties and state grant bond loans, we went to a 680. Okay. So with the state bond loan, I can understand that because if they're getting $10,000 from the state, these people don't really have too much, skin in the game. It's very easy for them to just turn around and just foreclose on the home. So we went to a 680 on the state bonds and all investment properties. Everything else, conventional, FHA, VA, and USDA, we're at a 640. Okay. Now that can change. That can change. I can get an email tonight that says, "Hey, we're going to 660 tomorrow, starting, or starting April 5th." I mean, that's how crazy this industry is right now. And we're hoping not. I mean, I think I feel that pretty confident at 640, we're not going to be losing too many of those clients that we would have done a month ago or 2 weeks ago. So as far as your FICO scores, that's where we stand now. This is industry. This is not just certain banks or certain, well, I'm going to go to Wells Fargo because they don't do that. No, they probably even tightened up, probably one of even the toughest out there right now. So because again, of what's going on, this is temporary. Things are going to settle back down. So we just got to weather the storm and hope that things get back to normal, quickly. The other thing I wanted to talk about too is about the appraisals. I think that's very important, and how that's being done right now. Yesterday, they finally, FHA finally came out with their new rules with appraisals, and they are now allowing basically an exterior appraisal only. So you don't have to let the people into the house. So that's actually a good thing. Exterior only on all FHA loans, and that will be good through May 17th as it stands right now. Okay. As far as Fannie and Freddie, which is all conventional loans, they've done the same thing. Their appraisals can be also exterior only, and again, the same time frame with them is May 17th. So up until May 17th, when we order an appraisal, it can be an exterior only. So the real estate agent doesn't have to even meet the appraiser at the house at all. No need to.
Do you think that'll streamline the process, Ron? Make it easier to?
Yeah, I think so. Absolutely. Because now they don't have to make that phone call. They don't have to make that appointment. As soon as they get that order, they have the address, boom, the appraiser is out there.
Yeah.
I'm finding no lag time at all, at least as of yet. There's really no change. I'm actually kind of surprised.
Are you seeing any under appraisals? We've encountered this very recently with a couple of our sales, specifically on the waterfront. But are you experiencing any under appraisals?
I haven't. No, I have not. Maybe the waterfront is kind of a tricky market right now. I'm surprised with that though. Really am. Because usually they're coming in. Yeah, they're coming in usually they come in right at the sale price, with no problems and no issues at all. Also, I want to just talk about VA came out with their ruling too, and they're a little bit tougher, but basically it's the same thing. If all parties agree to an interior inspection, they can still do an interior inspection. If all parties. So we can always just say that, hey, listen, the homeowner doesn't want you in the house. Okay. And then they would also conform to the exterior only appraisal. Okay. Or you could say agent says, no, I'm not going to the house. I don't want to meet you there. So, but they do have a little bit more restriction. If all parties agree to the interior inspection, he'll do an interior inspection. If no parties have flu-like symptoms, or no party is considered a high risk according to the CDC, then he can do an interior inspection. But exterior inspections are okay with VA also. Okay. So you can see has a little bit of changes in our business, slightly.
We talked about this yesterday briefly, but what's the volume looking like as far as purchases versus refinances right now?
Refis have pretty much dried up.
Oh,
Yeah, they've stopped. I mean, and I think there's a few reasons and a couple factors to that. Uh, People are not working, won't qualify. And we're getting some new information on that too. And there's been a couple of uh, new guidelines that came down from Freddie Mac and Fannie Mae that is saying that we have to do a verification of employment 10 days, within 10 days prior to closing, a verbal verification. Then another report came out, and it hasn't been really actually um, verified yet, that they're talking about the day of closing that verification of employment is going to be verified.
Wow.
wow.
I That's, yeah, to me that's a wow, because you could be sitting at the closing table, they make a phone call and the person says, is John Doe working? No, he's been laid off last week. Guess what? It's not good news for everybody involved. So we have to, I still have to get clarification on that. It's not etched in stone. It was a report. There's a certain company that sends out this information to our company, and then it's up to our company to either make it a policy or not. So as of right now, it's not a policy. So we do have to make certain that these people are employed when they close. I guess we're just gonna have to make that a rule.
All right. So without the refis there, then the purchases are moving. What's the average processing time?
Processing time, I'll tell you, within 30 days or 30 days, we haven't missed a beat. We really, it hasn't changed. I think I was telling you yesterday, our company was already set up remotely with our key components in doing a loan. I mean, I'm in the office, right? And everything I have to send is to my processor, who's in Sicklerville, New Jersey. And then she sends it to an underwriter who could be anywhere in the country. Okay, it's employed by us. It could be in Texas or Oklahoma, where our corporate office is, Florida. And we've always been running like this. So it really hasn't changed things for us. Our turn times, we get a list every day about our turn times. If I turn in a loan to get, or my processor turns in a loan to get underwritten, let's say at 11 o'clock in the morning, by 11 o'clock the next morning, I have our commitment. Now, it's a conditional commitment because obviously the appraisal hasn't been done yet, but for the most part, it's a commitment to lend. And that's all we're looking for at that point in time. Same thing with conditions. We turn in conditions yesterday. We turned in some conditions. I had clear to close today. Okay. So we're moving through the system pretty quickly. And, with the appraisals, Jim, maybe that may even speed things up a little bit.
Yeah.
Which is a good thing.
And it is a good thing, especially if you got that employment verification hanging out there.
Yeah.
Every week, every month, ticking time bomb.
I know, exactly. Of course, you look at the application. If you see if they're in the healthcare field, obviously that's not going to be an issue.
Mhm.
They're very well employed right now. It wasn't an issue because the deal, they still qualified, but I had a teacher who obviously is still technically employed, but you can't get a verbal verification. So we had to eliminate her income from the application. Of course, they still qualify.
Oof.
Yeah, exactly. Yeah. So, yeah, I mean, police officers are good. All those public service jobs are obviously are safe. But, we run into something where it's a type of job where the person may have been laid off. That's a little nerve-wracking, to say the least.
And like you mentioned to Mark and Gail and myself yesterday, all the self-qualifying loans are done.
Oh, yeah, that's right. Good point, Jim. All the non-QM loans, such as the bank statement loans, self-employed borrowers that are doing bank statement deals, are done. They don't exist anymore. These companies actually have shut their doors. They're out of business. Okay, very similar, back in 2008 with the subprime, where they had to close their doors. I see some of these companies may be coming back, but I think I see a lot of them probably will not open up again. It's really sad.
And
If you look at, let's talk about some of the positives.
good.
I think one thing, I'm tired of the negatives. I do see what I read and hear and see what's going on out there is that we are going to have sometime, we're hoping sometime maybe in the summer, late summer, and going into the fourth quarter, a banner end of the year. It's going to be rocking, okay? And I do believe that. I mean, once this comes in, you're going to have these people coming out of the woodwork.
Yeah.
The only issue I have is that I'm hoping that these people that were out of work, that they do something with that, because in our industry, we don't like to see 6 months of gap of employment,
Right.
but in this case, it's not their fault,
Mhm.
so I'm sure things will be, probably new guidelines will come out that addresses that.
Yeah.
But yeah, we're gonna be busy. I'm telling you, we're gonna be really busy.
So we were talking about that this morning, or earlier this afternoon, with that V curve.
Yeah.
The second quarter is going to hurt. Second
Yep.
quarter is going to hurt
Yep.
a lot. We'll hopefully start to come out of this in the third quarter if everybody does what they are supposed to do.
That's
And
correct.
the fourth quarter, which is usually our slowest quarter, could be rocking.
It could be rocking.
Yeah.
Exactly. It's going to be unusually probably busy, because you're going to have people that are going to come. Because see, what's going to happen is that interest rates are going to, it's not going to be as volatile right now as they are now. I mean, interest rates are all over the place. I mean, I got an email that it's an unfavorable market today. It's not a good day. Okay. And that's because the mortgage-backed securities, the federal government stopped buying them last week. Well, they bought them all week up until this week, and they stopped. And now the mortgage-backed securities are hurting, and that's driving the interest rates back up a little bit, slightly, but not a lot. But they're still coming up. But you're going to see interest rates in the third quarter, fourth quarter are going to be very strong, and I think that's when you're going to get everybody coming out of the woodwork wanting to do what they want to do, either sell their home, get into that new home, and we're going to be busy because everything else is all going to come together. It's a shame, because we were coming into the spring market ready to go.
Yeah.
But, unfortunately, guys, we don't have control over what's going on. So we just got to make the best of it right now. And I will have to say to some of the agents, I said, look, anybody that we pre-qualify and don't meet the FICO standards today, we just got to put them on the back burner. We can't forget these people. Okay. Yeah, I'll work with them to try to get their scores up above that 640 mark. But if somebody's in that, that 622 range and don't qualify for a mortgage right now, we'll see what we can do to try to move him up or her up to a point where we could get him qualified, or put him on the back burner for a later date when the FICO scores and the guidelines, come down. Okay. So we got to keep that also in mind.
That's a good point.
Yeah. We don't want to let those people get away from us.
Great.
But that's all I have. There's no other really other news that came out today, from yesterday, because we pretty much covered everything that we did from yesterday's meeting.
What is the mortgage interest rate hovering at right today with the mortgage-backed security issue?
You're looking at, if on I priced out, but the guy had a conventional, going for a conventional loan, good size loan, about $400,000 with 10% down. And yesterday he could have received a 3.875 rate yesterday. And that's for a 60-day lock. All our locks, by the way, are now going 60 days. I can't even lock a loan less. They won't allow us to. And they were given that extra days just to protect the client. Okay, there's no such thing as a 30-day lock. In fact, they even told us, if you're going to get involved with a refinance, you tell the client that we're locking the loan on origination. And if they don't like it nicely, tell them they can go somewhere else, because we're not going to waste our time on them, because, you know, the market is like this. It's all over the place. You know, if they like the rate that day and we have everything in, lock it, be done with it, you know. And it's really in their best interest. You can't really play the market right now, because there's really nothing you can watch. There's no gauge that we could say, well, this is going to happen or that's going to happen. You know, your consumer confidence was way off yesterday. You know, so that all plays a factor. Today, getting back to your question, Jim, it went from 3 7/8 to 4 3/8.
Wow.
Yeah, that's quite a little fluctuation there, right?
Right. Yeah, and then tomorrow it'll be back down to 4%. You know what I'm saying? So it's like it's all over. It's crazy. It's crazy. Yeah.
But it's important information that people need to know. I mean, they're being misfed misinformation, thinking that, 0% rates out there.
Correct. Right. Right.
So,
And the people don't understand when they hear, oh, the Feds dropped the overnight lending rate to 0. They think, oh, well, can I get a really great rate on a mortgage? They don't understand that what that means is that that's the rate that the banks lend money to each other at. It's near 0. Okay. It's not what they lend to the consumers.
Right.
So the consumers out there, based on how the media is, they don't explain it correctly, and it makes it sound like interest rates are at 0. And
Right.
it's all bad information.
Yeah.
You know?
All right, we just got the 10-minute warning, so
Okay.
we're gonna open up to Q&A. So if somebody has a question, raise your hand and I will unmute you. All right, Nancy. Come on, Nancy, I hit unmute. Where'd you go?
All right. I have a question. I had
Yes.
another agent say something about points. Is there points involved or something, like the point thing, or? I don't know.
Okay. What points are basically you're paying interest, or a point, or 1 point is 1% of the loan amount. So if it's a $200,000 loan, it's $2,000. What that allows a homeowner to do is to buy down the interest rate, to obtain a lower interest rate that they agree to pay the $2,000 up front to obtain a lower rate. That's what that means. Now, when rates are good, I don't really recommend people really doing that, because there's a bottom. In other words, you can't go sometimes any further than where you're at. So if you're at a 3.5% interest rate on an FHA loan, but the best rate you can get is only 3.25%, to spend all that money to get a quarter less in a rate sometimes doesn't pay.
All right, so it's not a big deal. Like, she made
No.
it to be a big deal. Like, yeah, I don't know. Like, we were negotiating something. She goes, well, what about the loan, and what if they get point? I'm like, what? Like, I didn't know what the hell she was talking about, but
Yeah,
I
right,
figured I'd ask.
exactly.
Okay.
Maybe she didn't know what she was talking about.
Yeah, I'm thinking that, yeah.
Yeah. Because they're talking about, qualifying. Sometimes people were forced to do that to obtain a lower interest rate to help qualify for the mortgage. And then they're forced to pay a point or so. And sometimes it's not even that much. Sometimes people will pay, it may only cost them like $700 to obtain a little lower interest rate. Well, in that case, it's probably worth it, because, let's face it, it's over 30 years. So if you pay that little $700 now to get maybe a little bit less on the interest rate, it will pay in the long run.
Okay,
But
cool.
more times than not, no.
All right.
All right,
Good question.
I think Walter raised his hand. Let me unmute Walter, right? Okay. All right,
Hi, Walter.
Yeah, Ron, somebody that's getting deferred payments on their company is paying them, or only paying them half their salary to retain them, and they go out and get a part-time job somewhere. How are you going to qualify them? Based on their original salary, or is it the part-time work and the regular?
Okay, that's a good question. Part-time work, you can only use part-time income to qualify if they've been on the job for 2 years only. So unfortunately, we can't use that additional funds to qualify for a mortgage because it's part-time. They could be here today and then 3 months down the road, they're laid off or let go or
Or they're
quit.
back to the regular job.
Well, right. Well, it could be I've had that happen too, where a person had 3 part-time jobs, but they've been there for many years.
Yeah.
And I can use all 3 jobs now to qualify just was a full-time position. That's okay.
Ron,
That's-
do you foresee the guidelines being loosened with regards to the part-time during this pandemic or no?
No, I don't.
Okay,
I don't see that happening. I don't think Fannie Mae or Freddie Mac is going to do that.
so probably no such luck, Walter, in helping.
Yeah.
Anybody else have a question for Ron? Raise your hand.
Come on, there's no bad questions out there.
Oh, you have 18 participants
Can't
on
see
here.
everybody.
All right,
Go
so
down to manage participants.
let's say manage participants.
Scroll a little now.
Make this bigger, right?
Yeah.
I think we got them all. Okay. All right. So exit.
I
We'll
think
go
so.
back. All right. So I think that'll wrap it up before we get caught up, called off or cut off like we did,
Cut off.
earlier today. Ron, thank you so much for your time and your
problem.
education and information. And if anybody does have any questions or obviously thinks of them after this, you do have Ron's information, right? Ron, what's your cell number?
It's 609-290-2081. Again, it's 609-290-2081. Feel free to reach out, to me, any question that you possibly have, or situation that you may have with that's going on right now with a client or another lender or anything that's happening. Use me to help, guide you through whatever situation you're dealing with. I'm here to help you.
That's great.
Right. And we'll put Ron's cell number, on Workplace with this recording. I am recording it, so you're all being recorded. And we gotta love Ray's background.
Yes.
Ray has also graciously volunteered to help me out with Zoom, since I'm a little Zoom challenged. Go figure, the tech guru here, right? So, I noticed when Ray joined on, he's utilizing that Zoom background, and Ray's got a Zoom account that won't time out. So we may make Ray our Zoom point person, and I'll just do all the talking, and he'll do all the magic.
Yay.
So again, Ron, thank you very much. Appreciate
No problem, Jim.
your time, your support, and
I saw that, Nancy.
what was that?
Her thumbs up. She's using the reaction.
Okay.
Oh, look at that. Oh, she's really good with Zoom.
Yeah. There's Maria. We didn't see her face the whole time.
All right. So homeownership.org,
Yes, that's correct.
and everybody, every bank, every institution, and we
All
didn't even
different.
really talk about the servicers of this, right? So, the servicing companies, their big concern obviously is, the first time default, right?
Yeah, they're worried about the first time default, and of course, then people that possibly can, eventually go into foreclosure. But the issue with the first time payment default is that, especially if it's a government loan, if a person has an FHA loan defaults on the first payment, that loan now is not sellable at all, ever. And that investor is stuck with that loan. So that's why you see the FICO scores are going up.
Yeah.
And because we're a bank, we lend our own money, and we're backed by the FDIC, we don't have that issue. So maybe that's one of the reasons why we're keeping our FICO scores at the 640 range. See, what happens is these lenders have to make the payments to Ginnie Mae, regardless if they get the payment from their customer or their client.
Right.
Those payments still have to go to Ginnie Mae. They don't have the liquidity to do that. So hopefully there's some talk that Ginnie Mae, or the government's going to help with Ginnie Mae funding some of this. So it's not going to be an issue. So hopefully we'll see what happens. Like I said, one day at a time.
We're about to get cut off, so.
Say hi to
Okay.
Jillian.
So bye,
Hello,
everybody.
how are
Thank
ya?
you. Look for this recording. Thanks, Ron. Really appreciate it.
All right, no problem. Thank you, guys.
everybody.
Have a great day. Be
All right,
safe.
focus on helping everybody. Focus on helping. Focus on
That's
helping.
right. Absolutely.
Thank
All
you.
righty. Bye-bye.